Hi, I'm Tom Lydon, editor of ETF Trends, here in Washington, D.C. at the Schwab Impact Conference, and I'm with Dan Draper, Managing Director of Global ETFs with Invesco PowerShares. Dan, thanks for being with us.
My pleasure.
Dan, smart beta is one of the big talking points over at PowerShares, and you folks were very innovative to get into that space early. Tell us about the thought process there.
Yeah, I think you had a group of great founders of the original business back in 2003 who looked ahead through a lot of the demand from various clients in the marketplace and found this opportunity to move away from traditional market cap weighting and really saying that, hey, maybe there are disconnections between the pricing of securities and the actual intrinsic value. How can you systematically, transparently capture these in an index format?
So we hear smart beta a lot.
Yeah.
Kind of break it down for us. There are a lot of different, it's smart indexing, active indexing. How do you look at it, and how would you describe that to the average advisor?
Well, multiple levels. I think at the most basic level, some people would argue smart beta is anything that's non-market cap weighted.
Right.
But I think specifically at PowerShares, what we've tried to do, again, from the original founders up until Invesco is now really invested in the business and we've expanded even further, is to look at three broad definitions. First, we start in something that's single factor. And you can see the success in some of our products, for example, that pay higher dividends. More recently, our high share buyback achievers has done extremely well, over $2 billion. You look at low volatility, high beta, so you get the picture. So we're looking at these single factors that can really help asset allocators build more efficient portfolios. The second big area that we focus is then combining a lot of those different factors, a lot of it from academic, Fama French characteristics,
right,
into multiple strategy or multiple factors. And that's where particularly the research affiliates or RAFI brand comes in. Mm-hmm. So one of the big successes of, I think we launched the first one back in 2005, and you can see now collectively over $6 billion in our FTSE RAFI range on that. And then finally, the third main area we look at is more intelligent indexing within smart beta or generally market access. So the partnership we've had with Deutsche Bank and commodities and the forward roll commodity areas has been very successful. More recently, we've used the active ETF wrapper, but around an index for China, which we're pretty excited about. So it gives you the three areas that we look at when we're thinking about new innovations.
And you continue to innovate, and I was talking with Rob Arnott earlier, and the fact that you folks were on this 8 years ago, and you've got not just great back-tested numbers, but real numbers. It's something to be proud of.
Absolutely.
Do you feel that the average advisor that has maybe an S&P 500 benchmark and did a good job with pure beta index investing for a period of time is now thinking, hey, there's a better way to build a mousetrap?
I think so, but it's also an iterative process because we were discussing earlier before the camera that the competition for traditional mutual funds, but also in the advisor space, has really intensified. Clients have gotten a lot more educated. So I think advisors themselves have had to look for more innovative tools, and I think once they get back to this asset allocation approach, they need more in the toolbox. So this is where the challenge has been on us as an issuer to really stay ahead of the game and provide them more and better tools. Their clients are more educated, the advisors are better educated, and hey, the issuers, we better stay on top of our game too. And I think that's what's happened.
So not just tools, but really now strategies, right? So you've got these strategies within ETF wrappers that you can plug in to provide greater diversification and in some cases less volatility for client portfolios, and you get them at a very reasonable price, right?
I think you've seen a natural harvesting. Maybe a decade ago you saw solutions that an advisor would love to get their hands on, but they were maybe more apt to an institutional client. Maybe the minimum sizes were too large, maybe they're only available in an SMA, but now all of a sudden in a fund format, in a unitized, smaller solution, if you will, in an ETF wrapper, these really more sophisticated solutions are now available to advisors in many shapes and forms. The single factor I mentioned, the multiple, if you want to have multiple factors wrapped, or even, again, the special access vehicles like commodities.
What are you looking forward to in 2014? You're fairly new in this position at PowerShares.
I am.
I know they are extremely excited to have you on board with all your experience overseas. Is that going to be the next growth area for PowerShares?
Well, I think certainly. I mean, international has to be part of the equation, but frankly, I look at this U.S. market, it's incredible. You see the growth in the advisor market, still a huge upside in institutional client segments, for ETFs, a lot of research supporting that.
Yeah.
But I think, selectively, the international opportunities provide upside, but they also, potentially come at higher risk.
Sure.
You have a huge lack of capital in the banking system, and that really does affect the on-screen market making and the larger fragmentation generally in international markets. So big opportunity, but tread carefully. I think pick your markets, but certainly markets like the United Kingdom, Holland, parts of Scandinavia, where you really do see the advisor market and this fee-based advisor market that you have, so richly in America. That's starting to happen. Those look like great opportunities, but I still come back here and I look at, again, a lot of the RIAs who started in many ways with PowerShares years ago using our products. I look how big their models are now and how big their client bases are and growing. A lot more to support them. But in addition, as I said, the institutional clients, we believe, are going to continue to really appreciate the liquidity, and we should see more growth in institutional space too.
All right. Well, looking forward to hearing more about your success. Dan, thanks for being with us
Pleasure,
today.
Tom. Thank you.